is episode 18, and I guarantee, yes, I'm guaranteeing this is the best episode ever. And you're like, how does he know that? The market got rocked. But first, who I am and what I'm here for. I am here for one simple purpose: to make you a better trader, to share what I know about the market and the way I see the market with you. I analyze demand, I analyze volume, and I generally see the patterns happening first. So here's the light bulb moment. Here's why I'm so excited about today, and then I'll just get into the market wrap up. I'm excited because I've been calling the market direction off the charts for like 3 months. I'm like, okay, so we're going to see a peak, then we're going to see a dip, then it'll recover, but we're still going to sell off. So it'll sell off at lunchtime. It might not recover today. It'll end up flat, something like that. I'll give you the day's summary. The great news about it is I just had the light bulb moment today, and I'm sorry I didn't think of it sooner because we started this platform, 349trading.com, for a while. We've been 2 months in, and I'm trading at my options are like 70% profitable. So 7 out of every 10 options trade is profitable. Stocks, I am profitable, but I have some positions that are losing money, so I haven't closed those out. So in all fairness, it's up and down, just like volatile, like the market. So lately, the market's been just teasing us and crashing on us, and every time it spikes, it sells off. The institutions are selling off, but that's not why I'm so excited. I'm pumped because I figured out that instead of investing in Plug or Neo or any of these other companies that are just ridiculously overpriced, like Blink, or even investing in some of the FANG, like Apple or Google, people that have companies that have earnings like Facebook, I've got the solution now. The solution is I know exactly what's going on in the market. I tell you guys with my pre-market video, right? Then I shoot a market video after 11:15 because I tell you the most important time to watch trading volume in the day is not when the market opens, because you'll see crazy ups, crazy downs, because nobody knows what's going on with the market or where their stock's going to be. It's all supply and demand. But I get excited at 10:45 till about, now it goes to about 11:11. And yes, I'm very specific with my numbers, all right? I track mostly what happens between 10:55 and 11:11. That's going to tell me the direction of the stock market for the rest of the day. So I don't care about all that other minutia and garbage in between. It's most important that you know the final outcome. So like today, yes, there was the sell-off, and we were like, oh, shoot, capitulation. But we quadruple bottom today on the NASDAQ, on tech, at 13,000. It just won't go under 13,000. If it does, we should be scared and start to run. No, we're just going to figure out when it breaks 13,000, if it does to the downside, that there is so much negative sentiment that it could drop another 1,000 or 1,200 points, and we're going to be on the correct side of that. So I'm going to talk today about the specific ETFs and how we're going to make money going forward just on timing the market. So if we know there's a spike in the morning, we're going to wait for that morning spike, and we're going to buy puts. All right. Or we're going to wait for the afternoon dip and we're going to buy calls so that we're bullish, and then we'll sell the next morning. I know a lot of you cannot day trade because you've already day traded this. You compounded your problem. So you're down 60%. You scare sold. Then you entered into another position right away that was probably somewhat similar to your first position. And then that's down 30%. And then you put extra money in the market, which you weren't going to do. So if you put extra money in the market that you weren't going to do, it's very important that going forward, alerts are still going to happen. And if you don't know, I have the platform, so please just pay attention. Alerts are going to happen, but I'd rather give you 3 alerts this week that are 100% going to make you money and make me money, because I trade through transparency. I'm not a financial advisor, but I share my own thoughts, and I've been killing the market lately. I know the dips. I know. Let's talk about the UVXY, right? So I knew it was going to spike at the end of the day, which is why I sent out a message like, don't worry, I'm holding it overnight. I know we went as low as $5, which I called yesterday. I called this morning that the UVXY was going to be by 9 a.m. $5.56, and that's after we closed at like $6.03 or $6.08 or something like that, because I knew it was going to go down, and it's still going to go down. So some people will tell me, yeah, but there were black market purchases at the end of business today. Someone bought 1 million shares at 511. Someone bought this. There was a huge spike at the end of the day. Yes, psychology of trading. People don't think the market's going up tomorrow. They're scared, so they took profit at the end of the day. There was crazy selling at the end of the day. People were taking profit, and stocks were off. So if anything, you would think the VIX would even spike harder, right? But it didn't. It dropped, what, 14% today? All right? The market was crazy. The market was volatile, yet the VIX on the UVXY specifically, which is like the VIX on steroids, dropped like 14% today, okay? I thought it was going to be 20%. So what am I predicting for tomorrow? As long as the markets are calm, meaning there's no like sell-off. There could be a sell-off, but it just can't be insanely gross. It can't just fall off a cliff. If it does, what will I do? planning in advance. If I see the market start to capitulate around 10:45 a.m., I will sell my put options in the UVXY. And then what will I do? I will get on the right side of the trade, meaning if I think tech is going down, I will buy calls out tomorrow for Monday of the SQQQ. Again, this is what we'll get to this point real quick. If you think tech is going up, you should grab a pen and paper, everybody. Grab something, grab your phone, open it up. If tech is going up, there are two ways to play that in the option field. TQQQ, right? TQQQ, tech's going up, it'll go higher. It's probably in the $96 range, okay? It was as high as 111 when tech was like spiking and outrageous. It went down to, I believe, $88 maybe the other day, maybe this morning, I don't even know. And let's talk about the SQQQ, okay? So the SQQQ goes up when the NASDAQ goes down. It's the reverse, okay? So the SQQQ will go up if tech is going down. So if we think tech is going higher, the reason I like the SQQQ is because it's lower priced. It's in the $12 and change range. So again, if I think tech is going up, I will buy puts. It's very important you don't mess this up. If you go puts or calls, so I will buy puts in the SQQQ, meaning I think tech is going up, so I think the SQQQ is going down. So if I think it's going down, I want to be correct. I want to buy puts, so it gives me the option to sell, okay? Again, UVXY, what happens with that as the markets calm? It goes down. It spiked when we had the capital rise to like 15. I bought puts. It went down to 12. It spiked from 10 to like 12 one day. I bought puts. It went down to 9. The point is, if you look at the 1 month chart or the 3 month chart on the UVXY, you'll ask me how I was so sure it was going down today, because it hasn't had 4 consecutive huge inflow days. Usually it's like 2, and then the third day it tanks. Today or this week or this time, it was 3 large inflow days, right? And then it tanked. But guess what? If there are so many inflow days, guess what? All these people are holding shares of this ETF, right? In expecting that it's going to go up. Like we spoke today, someone in the black pool bought 1 million shares at $5.11. Guess what? They're not selling in the black pool after market. They're holding their shares. And if the market does recover and it's stable tomorrow, and the UVXY will go down, it'll dip in the morning. You'll see it under $5 when you wake up. Like pre-market, you wake up at 6, 7 a.m. It should be down like 3%. That's my prediction. If it's up, say it's up like 4%. Something happened. Israel bombed Gaza. The pipeline didn't work. Okay, I can't control those things. Okay, I can only use the most probable things. Same with when I play poker. I can't control the outcome, the final 2 cards, but I can use my probability. Am I ahead in the hand? Am I behind in the hand? What's my probability? I use the number of outs. I multiply it by the percentage 2.2, and then I figure out if I have an odds based on whatever the pot is. So there are all these things that go into my head for a single wager or a single bet. The same thing is true for the UVXY or for the market direction, okay? So let me just clarify market direction, because going forward, it's very important that you guys pay attention at certain times. If you're part of my platform, this is what we're doing. Real quick, pay it forward. Share it with somebody. Everything I do is organic. So please, if you like what you're hearing in this broadcast, if you like being a member of my platform, if you like seeing my tweets or just following me on YouTube and you're not a member of my platform, please pay this forward. Share this with someone. Just be like, hey, this dude likes to talk about the market and he's talking about market direction. It's a new thing. The second part of this episode or live stream is going to be me helping you out of certain positions. So that's the same as we always do. You're going to tell me what your position is. If you're in shares, if you're in options, when your expiration date, and I would say if I'm in that position, what exactly I would do going forward. All right, it's to either salvage your position or help you turn it around and gain the max, max profit. Okay, so real quick, we spoke about the goal to make you guys better traders. Okay, so we're speaking about the UVXY. We spoke about the SQQQ. So for the Dow, okay, if the Dow is going up, meaning the Dow are usually 3-letter stocks, okay? So you're looking at Delta Airlines or, something like Carnival Cruise Lines or Norwegian, the casino stocks. Even though Wynn is a 4-letter stock, it still basically follows the Dow because it's a recovery play. People do things in person. It's restaurant stocks. It's lodging. It's, Airbnb basically, or Marriott hotels. Those are Dow plays. Okay, so say you think the Dow is going up or down. No, this is very important because we saw yesterday the Dow dropped 700 points. And then we saw today the Dow made 450 points. So anytime there are huge swings, okay, and I heard Nigerian thinks there are going to be huge swings going up, this is going to be the market norm going forward, meaning you're going to see crazy swings in the day. So the market will be off 200 points, then it'll spike to plus 250 points, then it'll drop again. So where you need to know these ETFs, because you need to pick the right side and you need to pick the right time. So let's continue. SDOW, right? If the Dow is going up, the SDOW is going down. If the Dow is going down, the SDOW is going up. So if you think the Dow is going to do good, you would buy puts on the SDOW. Same with tech. If you think tech is going to do well and tech is going to recover or be strong for a single day or even for the afternoon, okay, then you would buy puts in the SQQQ, okay? And the inverse is true. If you think something's going to tank, tech is going to tank, you would buy calls in the SQQQ. And if you think the Dow is going to tank, you would buy calls in the SDOW. Now, the reason I'm just stressing this and the importance of this is because there's going to be crazy volatility in the market. So again, we'll see a day like today where the Dow was up maybe like 600 points at one time. I don't know. I'm just guessing. Maybe it was the high 500s. And then it probably dropped to like maybe 299 or 300. These are entry points and exit points. All right. When we have a share or an option, we're selling when it spikes. And then we're buying when it dips, or vice versa. If we're buying puts, we're waiting till it spikes, like the UVXY. If I had waited yesterday until it spiked at 640 and bought my puts, I would have probably made 400% today. My puts are finally green, or at least they were when I checked them with like 10 minutes left. Maybe the market spike at the end took them from green to red, but we'll see in the morning. Again, I'm pretty sure I'm going to be right. We're going to have a more stable market tomorrow. Anyway, so I'm going to share with you guys exactly the times that we need to pay attention. All right, we all watched pre-market. It doesn't really matter. There's less than 1% of trading that happens pre-market and after hours. Then we watch the market open at 9:30 in the morning. Yes, it's extremely volatile from 9:30 in the morning for about 10 minutes to 9:40. Then it slows down a little. Then it picks up again till about 10:10. By that time, people think they know the market direction. So people actually start investing a little more into the market, but they're wrong. All right. The true market direction, which I mentioned to you guys, tune in at 10:50 Eastern time, see where the Dow's at, see where the Nasdaq's out, and wait 21 minutes to 11:11. See where the Dow's at, see where the Nasdaq's at. If the Nasdaq goes up, it will finish the day higher than whatever point it's at. So it doesn't matter if you're watching the Nasdaq and all of a sudden it tanks, you're like, wait, based on Matt's assumption from 10:45 to 11:11, it's actually going to go higher. So you're looking for perfect entry points. Or should it spike right after, say we know the market's going to go down because from 10:50 to 11:11, it goes down by like 20 points, okay? Then at 11:15, it spikes up 100 points. If there's no real news, then we know it's a fake spike, it's a fake out, and they're going to sell off. And that's what we're going to be in position for. So there are very important times to pay attention, okay? It's pre-market, give you the update. It's 9:30, we see how the market opens. There's no real decisions to be made until we know the direction of the market, because there are fake outs. You see every morning, it either dips right away and then recovers, or it spikes right away and then they just sell off, okay? You guys see it, I see it, that's what we're talking about. So again, okay, then you have 10:45, right, till 11:11. That'll tell you the end of the market day. Then you have what I call your lunchtime dip. So about 12 o'clock, volatility and volume kind of slow down together, right? And then anybody or any type of news or the president speaking will take the market, or Jay Powell speaking will take the market. Again, yesterday, just so we're all clear what happened, there was a pipeline issue yesterday, okay? The 10-year note spiked, which means it's harder for people to, it's more expensive for people to borrow money in today's market. Again, the last 6 months, there's been $8 billion borrowed from different institutions to invest directly into the market, all right? The last time, if you take that amount, that $8 billion, you have to add up, accumulate the last 12 years prior to that last, like 8 months or, 6 to 8 months, all right? So you got that one stand that's 12 billion, and then you go back a whole 12 years and there's 12 billion borrowed to enter the market. So it's very heavily levered, meaning it's extremely volatile. If somebody likes your stock, great, it's up 4%. Then all of a sudden, somebody wants to sell your stock and the market starts tanking and your stock is down 10, 12%. It's pretty sickening. Real quick, Bitcoin and crypto. So Elon Musk, he tweeted out something that Bitcoin's expensive because it takes energy that's bad for the world to generate these Bitcoin, to farm these Bitcoin. Guess what, Elon? You know this as well as I do. There's 18.5 million Bitcoin that's already been farmed. There's no energy because it's already been farmed, right? There's only 2.5 million Bitcoin left to be farmed. That leaves about 18%. Yes, I agree. There are too many companies farming Bitcoin. It would be great if it was regulated, but if then if it was regulated, cryptocurrency would be regulated, it'd be all different things. But the point is, there's still demand for it. I don't know why Bitcoin's tanking. I don't know why Ethereum's tanking. I looked at my crypto. Thank goodness I'm diversified. I mean, some of mine I got in this morning are up 10%. Others were down. So yeah, but it's stabilized. I actually, when I saw Bitcoin and other coins tanking, I thought I'd sign on and I'd be down like 20%. That's what I'm talking about. Always make a guess or a prediction. I signed onto my account, expected to be down 20%. I wasn't, so I was happy. So if you look at the market and you know what stocks and options you have, and you see, okay, the market's down 100 points or up 400 points, how much money should my positions be up or down? You have to wager a guess before you sign on Robinhood or whatever app you're using to look at it. Why? Because if you're saying, well, I should be up $500 today, the market's up, I should be up, and you're not up. Say you're just floating even. It's telling you your stocks are not the stocks in demand, and you might want to sell those stocks and get repositioned. So real quick, again, why I'm so excited about going forward, we're going to talk about and invest in these ETFs in the market direction, because you have stocks like, let's just say, Plug, right? So Plug's coming out and the market hates Plug because it's getting beat up and tech's getting beat up, yet they have earnings coming out and the earnings are somewhat decent, but then someone sells it, then there's a short attack on your stock, and then there's something else, then crypto tanks. So it takes, I mean, there are just so many things. You have to have earnings. People have to like your earnings. The market has to be in the right direction. Then there has to be demand for your stock. You can have all four of those things. You can have great earnings, right? The market can be going in a good direction for your stock, right? That industry. But if there's no demand for your stock, no one's there to push your stock up. So there are just so many things that have to go right for your stock to go up. Likewise, for your stock to go down, say, I mean, it works both ways. I mean, when Bitcoin was going up, Bitcoin stocks were going down, and we were like, what the heck's going on? But the NASDAQ was getting crushed in March. So it doesn't really matter, because what happened? The institutions were right. Everybody that was selling Riot at $50 and Mara at $48 were correct. I think Mara is probably under $20 today. Somebody asked me if I could speak about Mara. So I haven't spoken about Bitcoin or Mara in like 3 weeks. I do mention other cryptos every now and again. The reason I'm not talking about them is because tech was off for 9 straight days. Now, when tech's off, there's just no demand. There's no demand for any 4-letter stocks, meaning if you're in Mara, if you're in Riot, it doesn't really matter what Bitcoin is doing. If Bitcoin was exploding, yeah, there'd probably be some demand, but it's not exploding. They don't expect it to explode. The markets are struggling. Everything's struggling. So what happens? So Mara drops. You know, if you got out of Mara today, it was up 1% at one point. Then I think it ended up down 17 or 18%. You could have got out. One more thing. Somebody asked me to talk about EBON real quick. EBON, what I'm doing with EBON, and what I've been doing now for 2 weeks, and I'm up 19% now on my EBON stock. How is that possible? EBON keeps going down. Yes, because someone pointed this out to me about a month ago. They lowered their entry point from like $6.10 to, I believe, $3.80. Now, that was some time ago. It's under $2.50 now, which I just can't believe it. But here's what happens. Every time it goes up 20 cents, 25 cents, like it did this morning, I don't remember what it was up, but I was surprised that it was at the top of the graph. I sold my shares, and then what happened is towards the end of the day, I bought them back. So I didn't make money on the stock, but I didn't lose that percentage. So it was like 4 or 4.5% today. So I add that to the 16% that I saved so far, and now I've saved 20% from my entry point. So yes, my entry point was pretty high. I'm carrying heavy bags, but rather than being that, now I have a whole $1 to go less on my break-even point. And if I keep doing that, sell the spike, buy the dip, and I save another $1 here, and I do it for another 6 months, yes, I might actually be even without the stock really moving. Now, I do expect that stock to move at some point. Institutions are buying that stock. JP Morgan bought like 800,000 shares. BlackRock bought like 800,000 shares. These companies are not stupid. Again, crypto is going crazy. Anyway, I think that might be it. Somebody told me today on the side that they're getting killed today. 80% of their money is in crypto, but crypto is safer. No, everything's volatile right now, which is why we're changing the way that we're trading. We're going to trade ETFs because everything is so volatile. So why do you want to get down 70% or watch a stock, and you're watching a stock, and then Tesla comes out with some bad news and you're in a different EV stock? Guess what happens to every EV stock? They would all go down. Same with solar stocks. One solar stock comes out and they say something negative, hypothetically I'm sharing with you. Guess what it does? It tanks every solar stock. Let's remember when Netflix came out with earnings. What happened? It tanked Roku. And then Roku came out with earnings, and it spiked on earnings, but then the market's so bad that Roku's back at $310, maybe something like that. All right, I think I'm done. I think I want to get to your guys' questions today. That was awesome. I'm going to couple this up. I appreciate everybody staying with me, and I'm sorry I'm so jazzed about like this going forward. I know people are having very difficult days, if not weeks, if not months. It's a difficult market. Real quick before the question, Remember, in January and February, the markets peaked. The Dow peaked and tech was peaking and everything was frothy and it was too overvalued. So then we saw the correction in March and people thought that was over. It's not over. It's not like it goes from one end of the spectrum to the other. There's always going to be a fight and there's always going to be valuation. And the evaluation is important because the people that are putting the real money in are people on Wall Street. All right, are the big buck investors, the people taking huge wagers. If we add up all the retail traders, we still would not equal the amount of money they're trading. That's why they have the competitive advantage. Not only do they have the computers and everything else, but that's why I'm here, because I read numbers like a computer. I mean, it's sick. So I can see numbers, I can look at spreadsheets, and I can point out exactly what's wrong with the spreadsheet. With a deck of cards, I can flip through a whole deck of cards, and I can tell you the one card that's missing. I just remember things like that, and usually it's numbers. When it comes to people's names, I'm like, hey, boss, hey, chief, I don't remember your name. I'm not going to lie about it. I'm just transparent. I don't. Okay, so you have stocks. I know your stocks, and your stocks are all being beat up, and they're all four-letter stocks, and they're all more speculative plays. Portfolio is down 25%. Wait, no, go back to that one, please. Go back, reverse. Okay, yes, there we go. I'm in full positions on all my stocks with no money left. Okay, so what do you do? And please leave this up. No, please leave that up. Okay, you can't trade options. Okay, so you don't need to trade options, okay? But what you need to do is you need to average down correctly and you need to get out of some of your shit stocks. So I speak about stepping in shit and getting out, all right? So you evaluate each of your positions. And I'll try and do it real quick because you were on here first. That's why your questions came out. So let's go to your first stock. ASXC. I actually like the stock. I think it's a good, valuable stock. I would hold that one. EH, I would actually hold that one as well. Mara, I would sell Mara. I would have sold Mara a while ago. And you're going to say, but you didn't sell it on your spreadsheet. Yeah, you know why? I'm too busy with this damn platform. But I've been speaking for now 3 weeks saying, do not be surprised if Bitcoin stocks go down again. Do not be surprised if Bitcoin stocks go down again. Now, for anybody that's in Tiger, TIGR, please add Futu to your watch list. Why? Because Futu tends to react first sometimes. And like this afternoon, I saw it tank and I was like going to tell people Tiger's about to drop a little. And then right there it dropped. So you can realize this yourself. If you have Futu right next to Tiger and all of a sudden they're both up 4% and Futu goes negative 2%, if there's no news, Tiger is next to follow. They trade these stocks together. So usually I pair two stocks together and same like Square and PayPal. If one just tanks, I'm like, somebody sold a major position. It's coming. So these are cheating ways or competitive advantages. If you have a cruise ship like Carnival, add Norwegian, add Royal right next to them, right? Put Carnival in the middle. That's the one you're watching. Same with airlines. Say you have Delta, add Love, add American, add JetBlue. It gives you the competitive advantage. If you see two of the four airlines tanking and yours hasn't tanked yet, guess what? It's coming. I've thought before. Blink, Plug, ChargePoint, they all run together. So find stocks that run together. Canadian Solar and First Solar run together. NIO and Tesla, you should see the charts run together. Okay, find similar stocks. If you see Tesla's a tracker, if you see it tank, and Tesla got the best of me today. So I was 6-2 versus Tesla. Now I'm 6-3. I did not sell my position because I was taking a 40% loss. I put in like $5,400, I think, like that. So I'm down about 2,100 and change. But I'm going to ride it out till tomorrow. Again, I haven't lost against Tesla in a while, so I don't really want to be a loser on that one. So you have full positions. What do? So you sell one or two of your stocks, okay? Root is the most heavily shorted stock, and I'm sorry, I thought it would be jumping by now. I saw demand. The demand I saw left, so no one gives a shit about Root anymore. It's the most heavily shorted stock. So if you're in a heavily shorted stock like Root, the only way it turns around is if people talk about it like Reddit, which is like cheating, or the market turns around and then the shorts get scared and buy back their position. Right now, the way the market is, I would probably sell my Root. I like Plug. Trit doesn't bring you much value because it's only $5. NNOX, I like. There is demand. I can't understand why that stock. I saw it spike and then itself. I don't understand who'd be buying hundreds of thousands of shares of NNOX knowing that it would just fall because there's obviously not as much demand as I thought there was. I spoke about it yesterday. It went up to 24. Then it came down. Then I played around with it again. I sold it again. Then it went down. I think it's actually like $20 and maybe something like that. Cliff, right? No, wait, Cliff is under 20. No. Okay, sorry. So I would actually sell your Mara and I would sell your Root and I would find the other ones to average down, whichever ones are beat up the most. I like NNOX. It's been beat up. People actually think, and I speak to people, when I say people, I mean my Wall Street friends, okay? I actually thought NNOX was full of crap. They do these three-dimensional scans of x-rays, and I was like, there's no way that's possible, and it happened during COVID, and they gave a Zoom presentation. I'm like, that all looks so fake, and I was like, the stock was 65, and I think I shorted it, and then I made money. But I actually think it's a real company, and institutions and certain tech funds like in Israel are investing in this company. Now, they don't have a lot of money, but there is support for it, and they actually delivered machines, and they actually make money, and they don't have debt. So yeah, I love Ennox. So I would sell Mara, I would sell Root. If you had to sell one more, I really wouldn't. And then I would pick one of the two of the stocks that got beat up the most. I wouldn't go for TRIT. Why? Because there's not real support. That would just be a hold. I like Plug because it's been beat up. I like Ennox because it's been really beat up. I think EH is a great company too. And ASXC, again, if you had to cut one more, maybe it would be that one. But I see the other ones moving quicker. All right, sorry for the longevity of that question, but I hope I explained that one to you. That's why I'm here. I'm here to try and help you. I know we all have different positions that we're stuck in, or certain stocks or certain options, and we buy different expirations at different strike. Some people like out of the money. I teach people I like in the money options because they react. So somebody said to me, UVXY is going down, but my 550 puts aren't going anywhere because at the time you weren't in the money. For your option to be in the money, it has to be under 550. And at the time you were asking, it was like 560 in the morning or something. Maybe we went up to 5. I don't know. Anyway, it was still down on the day at the time. It was like 580 maybe. I just remember the idea most early. Yes. So pattern day trader rules. That's why it's perfect. When we see stuff, we can carry it over to the next day as long as we sell or put in our pre-market order. So when the market opens and there's that crazy spike up and down, whatever option we have, somebody's going to be interested in it. Someone's going to see the spike, and it's all computers. So as soon as it spikes, they want to pay us more money for our call options. As soon as it drops real quick, even though it's going to rebound, and we all know it's going to rebound in a minute because that's what happens in the morning, that computer wants to pay us our ask price for the option because it dropped for the put option. So I'm not worried that you're a pattern trader. I'm not going to get anybody in trouble if you're following me. All of my trades, unless I make like a special news comments where I'm like, oh my God, the sky's falling, get out, get out, get out, run for it. Use up one of your day trades. Because I will tell you, I tweet so much because I don't like to leave bag holders. I don't want people to not know what's going on. They look at one of my tweets and they're like, oh, he's bullish. And then they don't catch my 11 o'clock tweet where I'm like, the market just sold off. The market's going to tank. And they're like, dude, I thought you were bullish. Yes, I was bullish. But then when I see the market selling off between 10:45 and 11:11, I know we're going to end down the day, at some point. So if we sold there, we saw the dip at 13,000. That was the fourth bottom because it's bottomed that many times. So anyway, pattern day trader, no, you don't have to worry about that. Any position I give, it will be good for at least one day. If I sell, you tweeted today and said you guys would go to a 507. How do you determine that number? Yes. Okay. So somebody real quick this morning, yesterday evening, I said that UVXY would be $5.56 by 9 a.m. And that was exactly where it was at 9 a.m. And keep in mind, it closed at like 6:08. So how do I pick these specific numbers? Okay. I look at the charts, right? And I see where there was either resistance above or below. And then I see what the percent gain was for the day before. And if I'm right, we'll see about an 8% gain, drop in it in the morning. So I did the math and it was like whatever number of cents. And I was like, okay, 56. And that's exactly what we hit. And then I know it's just a mental thing. $5, people think like $5. Oh, nothing can go below $5 or nothing can go below $10 or $20. All these key numbers. Oh, it's $100. As soon as it goes 100, it's going to break out higher. That's what happens to stocks. So I know $5 will be a huge support. That's why I'm expecting by tomorrow morning, if nothing major happens, by 9:30 a.m., we're going to be under $5. So we won't have to worry about the support. And then the next support level will be around like probably every 10 cents, 490, 480, 470, 460, 450. Now, again, if the market capitulates and falls off a cliff, this will spike because people will get nervous. If there's a war in Israel overnight and they bomb the crap out of Hamas, or Hamas fires back and injures Israelis and there's a hospital and this and that, not good. If there's a ceasefire, great news. If the gas is flowing out of the pipeline, great news. If the market futures are flat to even a little higher, great news. If the 10-year note is not spiking, great news. So all these things are happening. That's why people are making these massive buys. So I read these message boards and they're talking about UVXY and they're like, this stock is going to kill it. This stock is good till August. So I tell the dude, I'm like, you should not be in this ETF. It's an exchange traded fund, which is what ETF stands for, longer than 2 days. It's usually a swing trade. So if we're swinging this or SQQQ, they take their expense out. So every day they nibble at it a little. They take their money out. The institutions do that manage these funds. They don't do it for free, right? So that's why you shouldn't be. The guy says in August, it spikes at least once every year. And then he came out, it spikes once every 12 years, like ridiculous. Great. unless you're expecting World War III or some type of major outbreak or plague or shortage, the market's not falling off a cliff. We've seen where the support is. Now, if the market does crack 13,000, the NASDAQ on the downside, it's not going to happen all in one day. We're going to be surprised. People will be like, oh, we'll drop 300. Now it broke support. Be careful. Then it'll be up 100. Then it'll drop 300 the next day. It's not happening instantaneously. We're not dropping 1,200 points unless there's a major crisis in America. And if there's a major crisis in America, say you heard the news first. Really? You want to be a good investor? You heard the news first. Something major happens, and it's going to upset the entire country. Guess what you do? You buy the UVXY. If there's a major news story and it's going to upset the entire country, or there's a major storm or a power outage or something gets flooded and all these towns are flooded off these major, the UVXY will spike. Any natural disaster, it spikes. Okay, let's go on to the next question. Yeah, so you're just telling me a couple things. I hope you're not asking about these all because I can't tell you what's going on. But what would I tell you about the Dow right now? So we dropped 750 points, and it made up, 450 points today. It started to sell off, so it was maybe up like 200 and change at some point, maybe 300 and change. If it were going to continue to sell off, like I mentioned, it would have dropped to like plus 100. If tech was going to continue to sell off, okay? And I mentioned that when it was like plus 175, it could be like plus 30 at the end of the day. Oh, no, it was plus 90. So it did better than I thought. But when it sold off, it bottomed at like minus 16, minus 20, minus 30. If it kept selling, then there were people that wanted to sell. It wasn't like people were like, oh, I'm going to play the bounce or whatever, or I'm going to buy in and play the bounce. Now, let me explain why you guys see bounces so quick in stocks and these violent sell-offs and these violent buys, okay? Because there are 30 to 50 million new traders out there. There are millennial traders out there. There are people that aren't part of my platform, and they pay the ask, and they chase the stock, and they look at the most active stock of the day, and they see it's up 22% pre-market, and they're like, oh, I'm going to buy that. It's going to be up 50% today. Yeah, every once in a while, they're right. But normally, what's happening? They're holding the bags. Now, a day or two later, it might spike again, and they'll be like, I knew it was going to spike again. But that's not trading. If you're just buying the most active stock, or you're following, like you're just chasing stocks, you're going to get hurt, all right? Real quick about people playing options, okay? I have specific rules about playing options. You have to be able to afford a full position, meaning your first buy is 25%, your second purchase is 25%, your third. So you buy one option, it goes down 40%, you buy two more, that's 3 total. If it goes down again, now you're down 60%. You have to buy more options. If you run out of money, then you cannot play with options. If you buy too many to start, say you buy 10 contracts and you only have enough money to buy 20 or 22, and that's liquidating your whole portfolio. So not only are you investing in an option when it's down, because that's what we're doing, we're averaging down the correct way. But let's say, and this probably happened to a few of you, and I'm sorry, but you text me on the side and you let me know, like, I'm getting crushed here, I'm getting crushed there. Here's what happens. You don't have enough money. You buy 10 contracts at first instead of buying 1 or 2, okay? Then you average down. You're like, I'm down 40%. He said 40%. Boom. I put in the order, 40%. I'm down. I bought 10 more contracts. Then you sell 100 shares of something because you have no money left. And then you buy 3 more contracts. So now you have 23 contracts and you're down 55%. And you're like, I thought I followed the rules. What the hell am I doing wrong? Because you did not give yourself enough money to average down properly. If you can't afford 80 contracts, then you can't buy 10 contracts at first. All right? Take the number of contracts you bought and multiply it by at least 5, okay? So if you're paying $200 per contract and you bought 1 contract, you better have $1,000 for that position, all right? If you spent $2,000 buying UVXY or SQQQ or whatever it is, you better have $10,000 just for that trade. Because if you don't, if it goes down 40%, you have to average down the right way. And then if it drops again, even though you're scared, you have to average down the right way. Now, if all your money is $10,000, you can't put it all in one position. So somebody's doing that and they're averaging down, and then they average down too soon, and then they sell 100 shares of stock, whatever stock it was, and now they have $4,000, and they're like, this can't be it's got to get better than this, right? How many people have said that? This has to be the bottom. Oh my God, it just fell. It has to be the bottom. Everything looks so cheap. It's dirt cheap. It has to be the bottom. And then you put in the money that you shouldn't have spent. So now you're all invested. 100% of portfolio or 95% of your portfolio is in this one options play, whatever it is. That's just insane. You don't want to do that to yourself. There's the right way to invest. So please, if the only thing you get from this broadcast is learn how to invest, if you're going to buy an option, and it's $300. The first buy you're going to do, maybe it's 1 or 2 contracts, $300. You better have at least $1,500 or $1,600 on the side in case you're not correct. Now, if you're correct, it's great. You can make a great return on options. So one more thing about options, real safe. Buy out the extra month. Buy out the extra 2 months. Whatever stock you like, okay? Buy out the extra month. When we're trading ETFs, instead of having them end that week, buy out the extra week. ETFs, you don't need the extra month. It's not like it's going to go this forever. It spikes. It goes head and shoulders. That's the great thing about these ETFs. If I can read the market right and I share the information with you and we understand that there's a head and shoulders and we get into the bottom and we get out at the top, or we sell puts at the top and we ride them down to the bottom and get max profit. That's the whole thing. And you're going to be like, dude, it sounds so simple. I know when the market's going up. I know when it's going down. You said this. I read the interest rates. I know it's going down, blah, blah, blah. Yes, it is that simple. And some of you say, yeah, I'm already in these ETFs. I know all about them. The point is, it's how you invest. It's how you time them. Okay, how many day trades does that take? No, I'm not going to charge you any day trades. Why? Because we're going to go in either at the bottom, whether it be noontime or 2 p.m. or 2:30 or whatever, or say it spikes at 10:30 or 11 a.m., right? Stock is spiking or an ETF is spiking. I'm like, it's got to go down. We're just going to buy the puts. And as long as it goes down, right? Granted, some of you can't day trade, so it has to go overnight. But if it's going down, if we gauge the right direction of the market, and it's been kind of easy lately, at least for me, I see the demand, I see the volume, or I see lack thereof it, or I see the selling, okay? So the point is, when I tell you, and it's scary lately, I'm like, I hope I'm not right, but the markets could throw up on themselves. And then what happens literally like 30 minutes after I shoot a video, the markets just capitulate. So we're all holding these stock or options positions going, I hope Matt's not right, I hope Matt's not right. Going forward, it's going to be different. It's going to be like, I hope Matt is right. I just got in the SQQQ. I hope tech falls. Great. Apple has being sued by this. Awesome. I hope it takes down Netflix and Facebook and this and that. Yes, we're going to make some money. So let's get to the next question. Sorry, I get carried away. I'm just really excited. And I'm so sorry. I have to apologize because if we were doing ETFs a week ago or 2 weeks ago, as tech was falling, we would be on the right side of that. Not to mention, as the Dow was going up for 6 or 7 straight days and it went up 400 points and 200 points, we would have crushed it. We would have bet against the SDOW. It was probably in the $10 range, and now I think it's like in the $8 range. Maybe it was as high as $11. Anyway, in an ETF, a move like that, 20%, you multiply it by 10 or 12, we'd return 200, 240%. We would feel safe because once you're going in the right direction, you know you're playing with house money. This might sound stupid, but it won't get delisted. It has to go under $1. And I mentioned this earlier. There are institutions buying in. I can't fathom. They need to come out with earnings or something, something positive to support the stock. I cannot believe the selling that's going on. So I'm shocked. I'm holding. I mentioned what I'm doing. I'm scalping. Every time it goes up 10, 15, 20 cents, I know people want to sell. I know it. First of all, the market was going down, so I know the tech is going to go down. And I know people want to sell that, and they want to sell Bitcoin stocks. So again, I saved like 20% today. I sold when it was like up 4.5%, and then it tanked like 17%. So I did the math. I made 20%. It's just all different things. Okay, next question, please. I don't think it'll get delisted. No. Institutions wouldn't be buying that. Same thing. AI, it's great for the future, all right? I love AI. I will hold my stock in AI. In fact, if I start liquidating some other stock, like it won't be Facebook, but if I liquidate some other stock that I just don't see doing as well, I will put and buy more positions of AI. Why? They don't have earnings, but our future is AI. So anybody watching this, if you're younger than me, which is probably everybody out there, but if you're a kid, everything's AI controlled. Cars, this, your home, your lights, whatever it is. So AI is the top of the game. I can't believe that. I think it's to drop under 50 today. I think it went to like 48. If it is, I might put a boatload of money there. I can't tell you. But again, it's a long-term investment. I would hold AI for 3 years. It'll be $220. What's it, $50 now? It's a 400% return in 3 years. That is a great long-term hold. If you're doing options with AI and you're getting killed, or I don't think you're doing options. So say you have stock. You know what a great thing to do with this stock is? Say you're getting killed. Say you have AI and your average is $73 like mine is, and the stock's $50, which means I'm actually down like 33%. I might actually do this. I might sell all of my AI stock tomorrow, and I might use that money, which would be like what? I have probably like 800 shares, $50. That's like $40,000, right? I might use like 10 or 20,000 and buy AI options that are leap year options in January. So if you guys are watching tomorrow and you see AI leap year options in or at the money, because right around there, I don't really care. I'll pay the extra money. If you see someone buy a chunk of them, it's going to be me. And if you see someone sell some, I don't have that much stock to make a difference. I mean, I have like 800 shares, so it's not going to tank the stock if I do sell, so I don't care. Share with your friends. I might sell 800 shares. But again, yes, say you're getting crushed. I'm getting crushed now 33%. And again, you guys bring this up. I don't look at my spreadsheets because I'm so involved with trying to teach, educate, share, learn, all these good things. And again, I want to update my spreadsheets and I want to send out alerts and I want to do all this stuff. Please pay this broadcast forward. This is a good one. I've been really stoked about this. The market is such crap. I can't believe I'm so energetic today. Really. I mean, when the market's bad day and we don't crush it, I get depressed. It upsets me because I want everybody to make money. If I think I should be making money, then everybody should be making money. It's crazy. And the stuff that they did with the UVXY today was not funny. The fact that it went down in the morning to like 522, then they spiked it up. I'm like, oh my God, these people are going to kill me. How could I be wrong? And then it went down. I'm like, okay, we're good. Then they spiked it up again. Then it went down. And when it hit $5, I was like, all this other bullshit during the day is just not fair. Like, you guys are probably like, I don't know if anybody sold. Hopefully you sold for profit. Hopefully you bought in again. That would be the smart thing. But anybody that was holding and then scare sold when it was spiking at $5.40 and lost their crap, yes, NNOX is Israeli. I understand that. Again, I thought it was a piece of poop company, but NNOX is down to the bottom. Ooh, you think so? I guess that would make sense. But the people in Israel really, I mean, I know I'm Jewish, but it's like they have such shelters. They have a defense system. I get they run for cover and go in the bombings, and people did get hurt. But I'm more fearful for the Palestinians in Gaza because they don't have the protection. I don't understand how these two countries can't get along. No, I do understand because they're fighting over land rights and things like that. But really, it would make sense, just like if you hate your neighbor, to get along, even your enemy. It's so much easier not to harbor or be upset about someone or to someone, to get along with them, to ignore it, to just look past it. And I don't know. That's just my theory on life. Let's go to the next question, please. Yeah, so it's getting killed, but there has been demand. Trit, would I consider bailing if I had no cash in hand? No, I wouldn't consider bailing on Trit because you saw it move 8% today. At least I did. There's still no volume. I know it went back down, but it moved 8% at first, right? Someone was buying, some institution was buying, somebody liked it. It's been so beaten down that I would not sell it, and I won't sell mine for anything less than like $8, maybe $9, maybe even $10, okay? And if I'm holding that long, same with EBON. I'll hold a year. Let them come out with earnings. Let them show how big their crypto platform is. If it's not big, I will certainly know about it. But if it is big, I don't care. Let me hold for 2 years. I'll hold 2 years. Give me $18 a share. Give me $16 a share in 2 years. I don't care. It makes sense. So I wouldn't bail on that one. I would bail on something else. If you're crushing it with something, say you're in a stock and it's just off the chart, like NUE, or you're in the gap. Say you were in the gap since 16 and now it's like $32 or $33. Get out. That's it. I really like Delta Airlines, by the way. I just did an options video. I spoke about Delta Airlines. I'm going to show the position tomorrow. I bought into it today. It was not an alert. It wasn't going on the spreadsheet. But I made a video today just about Delta. And the funny thing is, I spoke about Delta in the option, and I used the Delta to calculate the drop in the price and where I was looking to enter. And when it was $43 and change, I entered today. So it was great. I'm killing it in that option. The option will be out in the video. I will tell platform members about it tomorrow, I guess. The point is, when I shoot the video, I'm telling people that it's going to make anywhere from 100% to 300%. I truly think that. I think it might actually make 300% to 400%. So I'm so busy today, and I apologize for that, but I will share that with you guys. It's a Delta option. It's out in September. I don't remember the strike. It's like in or out the money, and I bought a bunch today. With that said, it makes sense to me. So Delta Airlines, I think the airlines are going to recover. I think the Dow is going to recover. I might as well get into it real quick. So shooting this video, I was trying to find a good stock that even the most simplistic of options traders can do. Someone that just got cleared, someone that doesn't want risk, someone that doesn't want to put a lot of money, but someone that would like to generate 100, 200, 300, 400%. So my options video will probably be releasing on Saturday. If not Saturday, it'll be releasing on Sunday. Please share this video, pay it forward. If they get to this point, we're 43 minutes in, then yeah, that'll be great. They'll be like, oh, great, I'm going to look on Saturday or Sunday. I'm going to subscribe. If you subscribe and push the notifications, as soon as my video drops, you'll get notified. We need a charting lesson. Yeah, I don't mind that. We haven't done that in a while. It's hard on this platform here because I would have to show you something here. And I did this before, and it comes in the reverse. So then I would actually have to write it backwards in order to show you. And then when I show you my phone, it's hard to read on here. But I will definitely figure out a way to do a charting lesson. I don't know how. Maybe I'll just do a video live stream where I can talk to you guys, tell you exactly what to look for. But when you use charts, I know people like to use the RSI, that resistance band, and they're like, oh, it's so low, it must go up. That's not true. It's low for a reason. Or it's so high, it's got to go down. That's not true. It's high for a reason. Stocks that reach new highs generally go up even higher, okay? So I know there's resistance bands that people are about. Now I go and I look at a 3-month chart. I'll look at a 1-year chart, and it's just simple lines. Can it reach that level again? What was it when it reached that level? What was the valuation? Do they have cash? I interpret all this information, and if it makes sense to me that they can reach that level, that's where I come up with my price targets. As far as entry point goes, real quick, I'm going to give everybody a free lesson here. Entry point. You say to me, Matt, how did you know that was the perfect time to enter whatever stock it was? Here's what I do. I look at the day trading range for whatever stock it is. Let's just say FCX, okay? Because I used that as an example the other day. It tends to trade up 4.5% if it goes up, or down about 3.5% if it goes down. So when I was entering this morning, I thought I was getting the best deal. It was actually down like 3.68%. And I was like, wait, if the Dow is strong today and FCX is like, a materials play, then it should do decent today. And it was, until there was a huge sell-off at one point. I don't know where FCX finished, but it's like Cleveland Cliff, CLF. I bought in under $20. It was even under that today. I think it was $19.50. So if Cleveland Cliff is still under $20, there's a stock for you. It's on my spreadsheet. I like FCX as well. But in this volatile market, you have to be careful. But I like the materials play. But charting, that's what I'm looking for. I look at the day range, and I say it could potentially go down 3.5%. And if it's down 5%, I think that's a bargain. And if it's pre-market, and I say it's going to be down 4%, and then I multiply that, the change in the price of the stock, times the delta of the option, and that'll tell me how much the option is going down by. So if I say the stock's going to go down by $1 and the delta is 0.50, I multiply them out and I get 50 cents. So I say, instead of my option, instead of paying $2 or $200 per contract, I will put in a bid at $1.50. And then at any point of the day, if the stock goes down 4% and Matt was right, guess what happened? Matt got his option extremely cheap. I got it for $1.50. And then when the market rebounds, right, and it's flat, all right, and that option is $2 again, guess what? Matt just made 33% on the option that he wasn't even watching the screen. So when I tell you guys, plan in advance, thank you, Jamil. That was the perfect lesson, okay? Pre-market, figure out the day range. If you want to enter into an option, I'll give you an example again. I bought eBay options this morning. So what did I do? I used the delta. I said, you know what? If the NASDAQ is crappy for a minute or 2 or 5 or 10 minutes in the morning, I'm going to look at the change in the stock could be like 80 cents or $1. I'm going to use the delta. So I took the dollar change, I multiply it by the delta, and I said I'm going to pay about 23 cents less per contract. Yes, it's that specific. So if the contract ended at 63 cents or 64 cents, I was going to put in a bid of 41 cents. And you know what happened this morning? I put it in pre-market, and I got the contract for 41 cents. And guess what happened? eBay still didn't get crushed today. It didn't crush it today, but the chart was real nice, just like the chart was yesterday. eBay looks strong. The volume looks strong. NFTs look strong today. And with the NFT plays, eBay says they're getting into the NFT field. It wouldn't surprise me. So I actually like eBay. So there's another free stock. So I like Delta. I like eBay. And we're not even going to be talking about stocks going forward because I want to give you I want to make you winning traders. I want to give you 3 trades per week. I want every trade to be winning. I want you to go to your friend and say, dude, this month I only traded 10 times. Guess what? Every time it was a winning trade. You'll be 100% trader. I was a 90% trader. Then I started giving out these picks. Yeah, this should turn around today with Tesla. I said it's my own personal thing. It's extremely risky. Please don't follow me in. But I wouldn't be transparent if I didn't tell you I invested in my Tesla options. Then it dropped. I put 1 contract. Then it dropped to like 672 or 73. And I bought 2 more contracts. And I'm getting crushed. I think it's under that. But what am I doing? I'm going to hold because I have time on my side. The same way I tell you to buy it out. I paid a little extra on the money. My contracts are out of the money. That's granted. But I said maybe Tesla reverses like $100. The point was I gave myself enough time. I gave myself over a month. So the decline today didn't crush me. I'm still down like, I think like 41% or something like that. So that's not good. I have 3 options. I'm down 41%. I'm down like $2,100 or $2,200. All right, next question, please. This is going good, by the way. And I'm sorry that, oh, God, I'm just sorry we weren't crushing the market like we should be. I get so upset at myself. Yes, UVXY did well today, but we should have got a better entry, and that's my fault, and I take the blame for that. And I always remind me, in fact, Matt is always too early. I might be a day too early. I might be an hour too early. Whenever it is that I think there's a bottom or a top to something, I'm always too early. I was like, oh, this has to be the top. It wasn't. It went up another 90 cents after I called the top yesterday. And I'm like, holy crap. It was up like 15%. And then it was up 30%. And I'm like, I'm so stupid. I'm so dumb. And then it went down today like it said it would substantially. And I think we're profitable. Again, I was green for a little bit at the end of the day. But I would have been killing it. You would have been killing it. We would have been like 300, 400%. So that's the thing. When I talk about entry point, wait, get the better entry point. When I talk about number of contracts, please, only what you can afford. If you can only afford one contract, buy the one contract. You have to be able to average down with two more. If it goes down, you have to average down with two more after that. You'll have 5 contracts max on any kind of play. If you're out a couple of months or at least out of 2 weeks, you never want to choose options the same week. They're so risky. You get immediate returns, yes, but you must be correct. And if you're not correct, you will blow up your account. And I don't want anybody blowing up their account saying like, yeah, I thought this was going to happen. I blew up my account. The object of this game, just like poker, is longevity. If you're with me 3 months from now, and yeah, I'm going to be right here 3 months from now. If you're with me a year from now, 2 years, 3 years from now, guess what? You're going to be making money. You're going to have so much money. And I'm not touting myself as one of these gurus. I'm certainly not a guru. I'm here to make you a better trader. I'm here to educate you. Please pay this forward. Share this video with someone. It's really important to me that I want you to be a better trader. I don't want you to rely on me. I want you to figure out the market direction, make guesses, make predictions. I mention that all the time on Twitter. Make a guess, make a prediction. When you guys tell me stocks, I look them up. I always make them guess prediction. Coinbase, I haven't checked. I think they reported after hours today. So it's probably moving after hours, but the way the market sentiment was, I'm assuming it got crushed. I bought one contract when Coinbase was like 292, maybe like that. I thought it was going to bounce up. I thought they had good earnings. I thought the stock would be $325. I think Coinbase was in like the 260 range or something really bad. I didn't even want to look, and I didn't want to look at earnings. But do I think it comes back tomorrow? Why don't I look right now? Since you guys are with me, and this is part of the session that we do, helping you guys get out of bad positions or telling you what I'm seeing in the market. So Coinbase, okay, it's not getting crushed after hours. It looks like, do they have earnings? 12 minutes on Coinbase since the quarterly update. False. I don't know. They said they gave an update, but it fell. But it looked like it's going up after hours. So maybe I'm reading this the wrong way. They're up 2% after hours. Coinbase. Do I see a huge rebound? I think it could be 5 times that. The most you're going to get out of Coinbase tomorrow, again, make predictions, is 5 times what we're seeing now. Might be a 10% gain. If you see at any point and it goes higher than 10%, unless the market's crushing it, get out. Cathie Wood controls Coinbase. The number of shares that she buys or wants to buy when something's dropping will control Coinbase. So she might buy a lot of shares. She drove Tesla up. Everything she invests in is terrible this year. Cathie Wood from ARK. Terrible. Had great years, but now she has to be ahead of the curve. So she's investing in longer term stocks, innovative stocks that have no return, that have no revenue, which is why she's getting crushed. She'd be down 20%, 24%. She has one of her ETFs buying another ETF so that she's sharing this so that there's demand. She's saying there's aren't much redemptions, but of course. So do I think Coinbase comes back tomorrow? I think you might be able to get 10% out of it. So where was it? 265, 269. So yeah, you can get $25. It could go to 290. Now that sucks for me because my option expires tomorrow and it's a $290 option. So what am I going to do that I'm in this position? I bet $1,500 or I spent $1,500. What am I going to do? Really? Okay. So what am I going to do? I'm going to try and get max value. I'm going to assume there's a spike of 12%. All right. So it goes right above 292. I'm going to hope that happens sometime in the morning. Again, this might be far-fetched and spike only might be 6% if there's a spike, or I might get stuck eating the whole option. I accept that because I want max return. All right. So if there was a spike and if I think the max might be 292, technically I should only get $2 out of that if I'm right and if it's a freaking miracle, right? So what am I going to do? I'm going to try and get something more than $2. I'll probably put in a bit of $4. I'll hope there's a spike early and that someone's silly enough to say, oh, this is going to 300. If I paid $4, I'll make $10 on it. I'll make 1,000. So they're going to buy it from me. And in fact, if I think that, I might raise my price on that. But yes, I'm going to lose on that. If you have Coinbase or you're not in Coinbase, yeah, I think it's decent. They obviously came out with earnings. The stock isn't tanking, even though the NASDAQ tanked. Cathie Wood's a big supporter. So yeah, I like the base at 265 all the way up to like 269 where it is. If it moves 4% after hours, that's $10 move or 10-point move after hours. It would be too expensive for me. So up to 2%, that's a good after hours. So you asked me to get numbers and stuff. I come up. 2% seems fair. 4% after hours seems like you're paying too much money. And that's true for a lot of stocks. Again, something might move 20% after hours, like OCGN used to move a lot. So if you're paying 6% after hours and you think it was going to move 24%, that's a fair trade. It's always risk versus reward. How much am I putting up? If I'm right, how much am I going to take out? Oh, I'll return 100%, so I'll make $400. If I'm wrong, what would I sell? I would sell down 50%, so that's $200. So I'm risking basically 200 to win 400, and I'm right 70% of the time. Do the math. It makes sense. As long as you're right more than you're wrong, it works out. Now, people that play my options or my alerts, if you're not in every single one, like NUE, I just made 500 and something percent. I didn't close it out on my spreadsheet, but I sold my option. I made about 500%. It was like 480 something percent. I call it 500%. Huge return. So if you played that for one contract, if you played eBay the other day, we had a good return on that one. If you played NNOX, even though it's down, I made money the other day. I made 102%. So you have to play every single contract. If you get too greedy and you don't sell for max profit, then I'm sorry, but you guys have to sell. That's why we're going to work on the alert system. I don't want to leave bag holders. I don't want people to say, hey, oh, DraftKings. Okay, so I could have told you a week ago, DraftKings was going down. There were huge investors that were making negative plays on DraftKings. However, the Dow was so strong that I didn't want to say DraftKings was going down. But it was like $50. Now I think it's probably closer to like $42. Let's see where it is. I don't really know DraftKings. I know the stock. Unless they allow sports betting, I don't like DraftKings. All right. The future is sports betting. The money that's going to be made is sports betting. It's not fantasy football. It's not FanDuel. It's sports betting. Okay. Vegas will be obsolete eventually when sports betting goes online. Vegas will be obsolete. People will be betting from their mobile device. People will be betting live betting. That's going to take over with sports betting. Okay. So yeah, DraftKings is at $41 off $1 today. Yeah. I mean, at $50, they were saying it was bad. At $48, they were saying it was bad. I saw the huge bet coming when the stock was $46 to the negative side. Now, again, if the markets were crazy yesterday in a good way, this person would have been in trouble. But they're betting on market sentiment. All right? They're betting that the market sentiment is just poop and it's going to go down. Anyway, yeah, I saw a huge wager. So let's talk about UVXY real quick. I saw a huge wager that dude bet $40 million in options that the UVXY was going to spike past like $20 or $30 by like, I don't know. It was quicker than the end of the year. It might have been September, but somebody's thinking the UVXY is going to explode, which means there would be a third world war. We would have a gas crisis. Someone would be assassinated. I mean, there would be terrible things. There'd be a bombing on, wherever. I don't know. There'd be a terrible disaster that would affect the markets. Somebody's making a huge bet on that. Not me. That's a terrible thing to do. Hoping that the government or something collides or collapses on itself so that everybody's screwed out of the market and one dude's on the side going, yeah, I just made $40 million. It's not even enough. The country's cost like 10, 14, whatever it is. Oh, real quick fact. So the IRS found that over $1 billion of fraudulent checks have been returned, okay? $1 billion for all the money they were paying out last year. $1 billion were fraudulent checks. Elon just posted in. You know why? Because so many people are beating up on Elon saying he's a dick. He's got billions of dollars. He has $30 billion. No, that's the value he lost last month was $30 billion. And yet the average Joe like us, we love cryptos and you're like little cryptos, big cryptos, whatever it is. I'm taking this coin, that coin, whatever it is. A lot of millennials, retails, and he likes those people and he wants to be one of those. And he tanked it. He killed people's. This one dude texted me, he's got 80% in cryptos and he's getting killed today and he doesn't know what to do. And then somebody else told me today, the market's too crazy. He doesn't know what to do. He's going to put 80 or 90% of money in crypto. It's terrible. Diversify. I like to gamble. I like to do this. Yeah, diversify. All right, you're in for 237 E-Buying spending. Is it worth dumping another? Yes, in my opinion, it is. But what would I have done? If I had 237 shares, I would have sold this morning on that little spike. I think it was up like 3-4 something cents, right? Knowing that the market could tank. The market was very frothy. Everything was up at a high this morning. Of course, there was going to be a sell-off. If not, the NASDAQ would have finished plus 500 and the Dow would have finished plus 800. So if you believe that, then you could have hold on to your shares. But I would have sold my 237 this morning and I would have saved 37 cents or 34 cents or whatever it was. So your average would have been down to $4 and like 82 cents. And then you wait a day or two and it spikes and you sell it again at the spike and you buy it back 30 cents cheaper. So you don't necessarily need to throw $1,400 at that. Now, if I knew it was going to move this week or next week, I would tell you, yes, it's a great idea to average down. So I will tell you this. It's a great idea to average down. I'm not sure the timing is correct. I think the stock is pretty darn cheap, okay? But I'm not buying a boatload more of stock because I can't believe it's this cheap right now. And what if they do push it under 2? What am I going to do? So I'm just holding right now. I'm watching. I think your $1,400 can be used for a different play. And let's say you invest in something else and the $1,400 turns into $2,800. Guess what? You can take the 14 on the side. You can take the first 14 and you can put an EBON and average down and still have your side play. Is there something on my mind for the ETF tomorrow? From now on, I'm not going to give out like, hey, I'm looking at this, because what happens? Some people jump in. They didn't get my tweet. They didn't get my video. They didn't get this. They thought I was interested in this. I changed my mind. If I can change my mind like anybody else can, I don't want to get you guys, mouthing or watering over something if it's not going to happen. But what do I think is going to happen? Again, there was huge sell-offs at the end of today in both the Dow and the NASDAQ. I think it's somebody clearing out the position overnight in case there's a catastrophe or disaster. So I would look at the UVXY tomorrow, and if it's down pre-market, like you wake up and it's off 2% or 3%, that's a good thing for the market. If it's spiking 4%, that means something bad happened overnight and that the markets could drop. So that's my indicator. Then I will look at futures, and then I see if futures were like a step stool, or if Asia either bought or sold off at 3 a.m. because Wall Street hates when Asia does something first. So you'll see the futures are flat. Then at 3 a.m., they spike down. You know what Wall Street does? They buy that day. They say, Asia, you're wrong. We're buying. Now you look at the futures, and they spike up. So the futures are like up 150 points. What happens at market open? It sells off. Wall Street says, thanks for spiking it up. We're going to sell our stock for 4% gain overnight. That's what happens. That is the psychology of trading. That's what's going on. So is there a specific ETF? No, but you know the three I'm looking at. It's either we think the Dow is going up or down at one point, which will be the SWOD, the S Dow, okay? If we think the Dow is going up, we'll buy puts on the S Dow. If we think the Dow is going down, then we buy calls on the S Dow, okay? The same is true for tech. If we see tech is going to move tomorrow or is getting beaten up tomorrow and we think it's going to rebound, that's the SQQQ. Tech going down, SQQQ goes up. SQQQ goes down, tech goes up, okay? So if I'm excited about tech, we'll be buying puts. If I think tech's going to throw up on itself, we'll be buying calls, all right? Should I sell my June plug or Tiger calls? So a quick way, okay? Say you're stuck in options. This is for everybody, okay? You're stuck in options, June plug or Tiger calls. I don't care what your strike price is. Let's say it's out of the money because the stock has gone down. So let's say plug is 25 and Tiger is 17.5 or $20, and you're getting crushed, and maybe they're only worth, I don't even know what they're worth. What are you looking for? You were looking for a day like today where I think the Tiger went down, but it was up 4% when the market opened, maybe as high as 5%. You plan ahead and sell on the spike. Then when it dips down 3% or 4% at some point during the day, you buy the same options that you have for June, except you buy the Julys or you buy the August, okay? You're basically buying yourself more time, unless you think plug and Tiger are going to be beat up forever. And I don't think that's the case. I know that both have demand. I've seen both have demand in the past day. Tiger had demand because they were adding to the Chinese exchange, a couple of exchanges. So there was demand for the stock and people were buying the stock. However, when the market got ugly and you look at Futu first, again, I saw Futu drop like a bunch of percent. It was hovering around $100 when it was 117 2 days ago. The same thing's going to happen to Tiger. Tiger was hovering at 16. Now I think it's like 14.50. Again, options expire tomorrow. So if people are selling call options at $15, which I know people did, they're going to try and hold Tiger probably under $15. So that was the fight today. You had the new exchange adding their shares, and then you had people trying to sell Tiger. Same as plug. You get the spike on plug. I think it might have been up 4% at one point today. You saw it sell off 2% pre-market, then it was up 4%. You got to plan ahead. You sell your plug options when it goes down, if it goes down that day or the next day or the next day after that. I don't care if you hold it overnight till Monday and you just have the money on the side. You're looking for the biggest dip and then you buy. Same with anything you're in. You could extend it out a couple of months by selling the peak and buying the dip and extending it. Next question, please. NEO, September, $3.90. It's $2.30 out of the money. You have 4 positions. Do I see it reversing? I do, but if the market is beat up, that is a stock that's getting beat up. So that stock will follow Tesla around. And unfortunately, people are pretty sure that Tesla is overvalued. Again, every time it had support at 598, I thought it was going to curl back. It had support. I thought I saw at 580 something, then it dropped even lower. And then I jumped in, then it went to 570. Again, let me just see where that's at, because I know NEO had support at $30 and change. Yet I think it was like $31 today. And I want to give you a real answer on there because that's an important question. And you have more than enough time to sell. So yeah, I'm going to look at the one-day chart of NEO. Again, its high today was $34 and change. So yes, it dropped 7.3%, but that whole industry was beat up. So you ask yourself, are other green energy stocks going to go down? So you look at NEO, Tesla, XL, solar companies, and you look at the price and you say to yourself, can all these go down lower? I mentioned Blink yesterday, and I said Blink, it was at like 29. It could go as low as 25. And I'm going to look at Blink real quick because you always make a guess. And I think 25, to me, people would buy it. Okay, 26.14, it's 26.22, off 8%. So I was pretty darn close. It threw up 8.5% or 8.8%. Point is about Blink. I don't think it goes much lower. I think it could drop another 5% max, but I don't see it go much lower. So I think a lot of these stocks are like that. NEO, I believe, is like that. I don't see NEO going into the high 20s again. So I think $30 is pretty much its range. I think it was like $30.50. That's where I think it could go down to. So I get that you have 4 positions. I get that it's out of the money. What would I do in your position? I might try and improve your position. Let's say NEO has good news on battery day and it spikes 10%. I might plan ahead. Yes, so it will reverse. There will be one day where it makes 10, 12% in the next week. NEO is also heavily shorted. All right, so you need a green market day. But here's what I would do. Say NEO spikes 8%, 10%, 12%. I would sell your positions, get max value. Then what do? Wait 1 day, 2 day, 3 day, 4 day, 5 days. I don't care. Wait 5 days. It'll come back down. So say it spikes back to $34.50. Sell your options, and then you wait for it to dip back to $32. Buy the same options. Guess what? You just saved yourself $1. So you're down 70%. You just made back like 35% without doing anything. The stock didn't have to move. You can make back half your percent. So again, sell at the peak, buy at the dip. You can hold for a couple of days till you get the right entry point, okay? In fact, I suggest that. All right, so hopefully that makes sense for you. I do think it'll reverse. Okay, FLGT. Oh, is that Fluent or something like that, like the weed company? I hope not. I already tell you guys all the time, I think the weed companies are overpriced. I can't see the stock, though. FLGT. Oh, no, I don't think it is GT. Fluent. Oh, no, it's genetics company. Okay, thank goodness. Okay, so I'm looking at the chart. Yeah, after earnings, actually, there was good buying and good demand and good inflow, and yet the stock went down and the stock went down and the stock went down. So I'm actually adding that to my chart. Is it heavily shorted? It must be heavily shorted. That's the only thing that makes sense. But yes, the 1 month chart looks great on this. So my price target on this one would be right around $82. It's $67, okay? And it's off, okay, it's off 18% in the last month, 14.85. I'm saying it could gain about $14. So that makes sense. I think it could gain back what it lost on the map. Let me look at the 5-day chart. Yeah, I think it dipped down on the 11th, pretty low. It rebounded pretty quickly, and it's dropped with the market. Yeah, I like that stock. I'm adding it to my list. Ooh, Alexander. Ooh, you had a good one the other day, too. So appreciate that one. Everybody, FLGT, if you stayed, 52 of you stayed, we're an hour in. Please share this, okay? If you guys are here this long, or you're even just watching the end, or you're watching over the weekend, share this with someone. You hear someone talking about stocks in the elevator, tell them, yo, I watched this dude on YouTube, 349 Trading. It's real easy. He does a live show. Okay, Blink. Okay, so Blink is the most manipulated stock. It just happens that you're talking about that. All right, Blink, 33 shares. You're down 12%. You're down 12%. Okay, you're not getting crushed. You actually have a decent entry. So good for you. You actually waited. You're down 12%. If you have money, okay, Carter, do you like the stock? Do you like the company? I spoke about Blink before that it's 3 guys in a boiler room in Miami Beach, and I'd rather be involved with Plug. So that's my one thing. I'd rather be involved with Plug. I'd rather be involved with ChargePoint. So what would I do? You're down 12%. I would probably get out of Blink and get in either Plug or ChargePoint. But let's say you like Blink. I actually don't think the industry is fairly valued now. I think it's been totally obliterated, okay? I think Plug should be a double. I don't think Blink should be $60, but it wouldn't surprise me if Blink made it to the high 30s or even $40. So yes, at 12%, I would average down. I would take a second position. You're doing it correctly. So what would you do? You'd buy 33 shares tomorrow. Now, you don't just buy it at open. Why? Because they like to push Blink. It'll be up 3% pre-market, and you'll be like, what? 3%? I better get in. No, you don't want to average down there. You want to average down when you see Blink drop the most. So you follow the NASDAQ. You say, oh, it looks frothy. It might drop today. It might even go down. Now, lately, we've been seeing end of day, the NASDAQ has been the lowest point that it's been. Not today, but it's been happening last week. So I'm telling you, you can average down, but don't get excited. Don't do it at 9:30 a.m. Don't do it at 10:30 a.m. Wait till you think you get the best price. That's if you want to average and blink. If not, say you want to get out of blink. Set your sell price for whatever the price is now. Anticipate a 1% or 2% pre-market gain. Sell your stock, and then when the market dips tomorrow, buy Plug, buy ChargePoint, buy one of the other companies that I like a little more. That's what I would do, but you got a good entry point. I just don't like the stock. It'd be my third favorite. Thoughts on Palantir? Okay, Palantir got beat up. It has a new price target of 170. That doesn't surprise me. Palantir, Jumia, there is huge demand. Now, those are the speculation plays that I spoke about with 4 letters in the name. Palantir, Jumia, there's one other. But I know institutions like there. I think Andrew Leff likes Palantir, right? Yeah, it wasn't Plug. It was Palantir that he likes. Again, I think it's like $18 and change. I knew 22 was pretty low. I said it could hit $20. It doesn't surprise me that it lost another $1.20, maybe even $1.50. Maybe it's 18 and change. I don't think it's going to $15. So I think it's a good entry point. I think if you're buying options in Palantir, you're averaging out and you're going out maybe till September. Why? Because then it doesn't matter time-wise. If you're buying stock, yes, take your first position in Palantir. If you already have positions in Palantir, what can we do? We can average down. Again, if you're not seeing me average down on the spreadsheet, I'm not sure the stock has bottomed. Also, I'm pretty busy, and I should be paying more attention to the spreadsheet, especially the stocks. I know it's about the options play because you guys want instant gratification. So I will look over the stock plays, and I probably will add some positions at some point. All right, Corey, you average down too soon on Tiger Leaps. You're down 50%. Oh, okay, but it's a leap. It's a leap. That's fine, bro. Leap, you have all the time. Then I would have been struggling to sell the P because I thought it was already undervalued. How can it play out? Okay, so you have leaps. You're down 50%. Okay, so that sucks. I'm assuming you probably bought the leaps when the stock was like $19, I'm thinking. Hopefully not more than $19. The point is, if you have money, you can average down. If not, here's what you do. You assume it's going to spike and then dip again. So you look at tomorrow and you go, okay, just hypothetically, say your leaps are worth $5 now. You put in an order to sell them at $5.70, let's say tomorrow morning, or $6, right? You want to make 20% from whatever they closed at right now. You want to make 20%. You're looking for the spike, and when that happens, then you're looking to buy back the same position for $5. So if you have options and you sell them for $6, and then you buy them back for $5, guess what? You just saved 20% on your option. So instead of being down 50%, now you're only down 30%. Got it? So say you're down 50%. Again, plan for whatever it closed at today, whatever that middle point is, add 20 or 30% up to that, right? Say you sell, then buy back for what the price is right now, and you'll save 30%. You'll only be down 20%. Do it once or twice, and you'll be break even already, and you'll actually like Tiger again. So anytime anything that you guys might own spikes, let's try that, all right? Sell the option, get back 20 or 30%, plan in advance, okay? You have to enter the order in advance for a 30% gain, a 40% gain, a 20% gain. And then you know when it dips down, you're going to buy the same option position. That's how you save 10%, 20%, 10%, 20%. All right, man, everybody, have a good night. Pay this forward. Share this. Share this. What affects the delta of a stock? It's just how it affects. Everything has its own delta, the volatility, the stock's day range. If the stock doesn't move, it'll have a very small delta. All right. Again, everybody, you guys are great. Thank you so much. We went over tonight, but have a good evening. See you guys later.